my passion. This is my passion. This is why we started our company, and I want to start it with just a little story and give you a few deal stories and help bring this to life. So, I was at Marcus and Millichap, and I saw friends, family, and clients literally lose half of their wealth to all of their wealth because of the problems with the 1031 exchange, okay? In fact, in 05, 06, 07, they were really excited to be a seller for the big prices, but they hated being the buyer because they're on the other end of this. And we've already kind of touched on this, but the position that put them in when the market shifted was all of their eggs were in one basket. They weren't diversified. They weren't liquid. They had too much debt. And now they worked for 20, 30, 40 years and see everything evaporate, okay, and feel all this pressure and the stress from the banks. And so I was new in the business. I was just trying to make it in the business. I was just trying to survive. I had a new baby girl at home. My wife and I, it was 100% commission business. And I had to do what every good entrepreneur does. And I had to pivot and I had to shift. And it's probably maybe what you're facing right now in this COVID-19 market, perhaps. And so I went and got a side job. I got a side job at Cheesecake Factory serving cheesecake. And by day, I'd make cold calls, helping people hold on to their properties, renegotiate their property values with the tax assessors, work on concessions and rent collections and anything to keep their tenants paying. And at night, I'd be serving Cheesecake Factory to keep my dream alive. And so not only was I struggling, but my clients were struggling. And so we had to innovate. We had to think about something new. And I don't know if you've ever been so scared and so frustrated of trying to build your dream and try to do what you love to do, but you're not making traction. And that's where I was. I was really scared. I remember literally breaking down and crying in my mentor's office. All the pressure just hit all at once. After all the frustration, going, oh, what am I going to do? Maybe I'm really going to have to go get the real job. A lot of people are saying, go get the bank job or give up on your dream here. And I go, I don't know. But just that next week or 2 weeks after, this is 2009, a gentleman came in and spoke about the deferred sales trust, and he's now my business partner. And he told us about something that revolutionized the way I approached the business and my career forever. And at the time, it was just a seed that was planted. But I started to learn about this deferred sales trust. And basically, he went on to tell us that people don't ever have to feel trapped by the 1031 ever again. They can be free from toilets, trash, and liability. They can have liquidity. They can have diversification. They can go back into real estate at optimal timing, meaning whenever they want. And he went on to tell a story of a gentleman who in 2006 sold a property in Minnesota for $20 million. And he used the deferred sales trust for the first time. This gentleman's worth over $300 million. And he did not do a 1031 because the prices were too high at that point, but he parked the funds in the deferred sales trust. And 5 years later, fast forward after I had learned about this in 2009, I said, what was the outcome of that, Bob? He goes, well, he actually bought it back from the bank on foreclosure at 60 cents on the dollar. And I said, whoa, Bob, you told me about this 2 years ago, but are you telling me that you can sell high and buy low, all tax deferred, not using a 1031 exchange? And he goes, that's exactly what you can do. And I'm going, this will change everything. And so at that point, I started to roll it out to my clients, and I started to see my business grow, and I started to see myself grow and add more value. And fast forward over 10 years now, this is all we do. We just train business professionals, and we speak on the deferred sales trust, and we help bring clarity against different tax deferral strategies. But the biggest thing I want you to know is you can now escape feeling trapped by capital gains tax or help your clients do the same. And really, it's the first secret, and it's understanding that how to legally break free from capital gains tax, okay, on the sale of a primary home, investment real estate, highly appreciated public stock, a business, and buy a property or a business, all tax defer without ever worrying about a 1031 exchange ever again. That's secret number one. And that's what we've been able to do. Over thousands of closes now, collectively with the deferred sales tax attorneys and my business partner and our strategic alliances across the nation. And you name it. The biggest deal was a $125 million deal in San Diego, $80 million car dealership in Central California, veterinarians, optometrists. We just closed a deal, a $7.6 million deal for a client of mine. His name is Dave. And see, he was selling and he was looking at a 1031 exchange property, and he's bought and sold hundreds of properties literally for 30 years and done multiple syndications and 1031 exchanges. And for the first time in his adult life, he's going, oh my gosh, I don't want to touch these 4.5% and 5% cap rate deals. These are way overpriced. And so he actually lives in San Rafael, California, not too far out of the Bay Area there, or in the Bay Area really. And he's looking in Georgia, where he's selling his property in Athens, Georgia, 128 units. He's in a 1031. He's literally past his 45 days. He's not saying anything. And then COVID-19 hits and he's like, oh my gosh, Brett, you told me about this deferred sales trust a year ago. He calls me up. He says, we're all in. We're moving all of our equity. We're getting out of all of our debt. And that's one of the biggest secrets for the deferred sales trust is you can save a failed 1031 exchange. It doesn't take up any of your 3 positions, and it gets you out of all of that debt. And so remember in the beginning, I talked about debt is not your friend in a highly appreciated market. Well, this is exactly what he thought too and does believe. And so he got on the sidelines. And this is the cool part. I think Matt and Todd are like this. He put $2 million with a real estate syndicator who does multifamily investing and also hard money lending. So he doesn't necessarily have to go into stock market, all passive, and the rest of it he'll put it in the stock market. So he's getting some diversification. All the while, he's retired from the toilets, the trash, the liability. He's out of the debt, and he has flexibility to enjoy his wealth, and he didn't have to put it all into one deal, and that was really big. And he's part of what is known as the perfect storm facing baby boomers, and this is the largest wealth transfer in the history of the planet, and it's somewhere between 17 to 20 trillion, and this is according to the American Bankers Association. That's going to pass from that generation to our generation, Todd and Matt, in the next 20 years. And literally, we're seeing people want to get out of the toilets, the trash, the liability. In fact, there's about 10,000 baby boomers every day turning 65, and every single, there's about 77 million in the US alone. And so we're looking at how do they retire from all of this without getting hammered by 30 to 50% in capital gains tax while maintaining liquidity, diversification, and the freedom to go back into real estate whenever they want, right? When the market shifts, we think we're at a crest right now, and we think the market's going to go down. There's going to be some real buying opportunities, but the key is to sell high and then wait for that crest. It could take 6 months, it could take 12 months, it could take 18 months, and then buy low, ride it all the way back up again, sell high, and put it back into the deferred sales trust. So the deferred sales trust is really we think the most like a Swiss Army knife. It's going to give you a lot of things. It's like a Netflix, right, versus the Blockbuster. And the next thing is you get a brand new depreciation schedule. And this is powerful, right? So if you've owned multifamily for 27 and a half years, you have no depreciation. Well, if you trade that asset for another asset and it's the same price, you still have no depreciation. You only get more depreciation on the next chunk that you buy above and beyond what you sold it for. Well, not so with the deferred sales trust. You can literally buy the same property and get a brand new full depreciation schedule. So those are some of the things there that we love about it. And I'll wrap it up with this. What we're really trying to communicate about what the deferred sales trust can do is what's called transformational exit planning versus just transactional exit planning. And so we encourage every listener to look at what are your goals, what is your vision for your finances, for your wealth, for your legacy. What does it look like for estate taxes, right? And what model or what tools, multiple tools, I think opportunity zones, I think deferred sales trust are probably the 2 best options right now given the marketplace for most of our clients. How are those going to help you get to where you want to be? How is that going to help to leave a legacy for your wealth to give to the causes you believe in most, but with not having to give it all away to charity, right? And this is where we want to help give you clarity on that and help you have a transformational exit plan versus just transactional, where you're just trading one asset for another asset, and which leads to my last deal story. Peter, he's driving from Marin, California to Sacramento. He had 18 units, and he's trying to sell his property. And I said, Peter, why do you want to sell? He goes, well, Brett, I got 18 problems. I got 18 units. I go, why not just do a 1031 exchange? And he goes, because I don't want 36 problems. I already have 18 problems. I've made my wealth. I'm turning 70. I want to retire. So he goes, so he chose the deferred sales trust. He got off all of his debt. He deferred $500,000 of tax, and it's all in liquid diversified investment grade securities, some of the biggest companies in the world. And he has now more time to spend with his family, more time to enjoy his wealth, less time of driving. I don't know if you guys have ever driven from San Francisco to Sacramento. The traffic is terrible, right? Or trying to go back. Well, he's doing that 3 days a week, right? And so he got out of it. And that's the transformation we want to provide. And last, it works for primary homes. It works for public stock, cryptocurrency, and we can do all of this, but we need you to come and get educated and get encouraged and look for ways to have a transformational exit plan.
As we've kind of chatted before, it's diversification, right? I obviously, the reason we have Brett on this and having him kind of head this, right, is because I'm obviously a huge fan of it. I mean, it's still somewhat foreign to me, right? But the thing is, if I were in the situation that it worked for me, you go to someone like Brett that you trust, you build a relationship with that person, right? And I think the other thing that we touch on, the recurring theme in this podcast, is that diversification piece, right? Use these things as tools and mechanisms when you're in that 45 to 60 days, you're talking to your CPA, When you're talking to sponsors, the guys like me who are still stupid enough to deal with those trash and toilets, right? And do it for fees, right? We try to talk about this with our investors who are facing capital gains, and I referred a client to Brett who, it was like he was trying to set something up for his sister-in-law who had Alzheimer's, right? And, as a sponsor, we could have easily wrapped them into an OZ deal, said, hey, yeah, give me all of it. It was like, no, I think you need to talk to this guy, Brett. He's going to set you something up. If you want to put a portion of your assets in an OZ deal, because he was getting up there in age, he was 80 years old, that makes sense. We can get you there. But I don't think that's part of your holistic strategy. You need to find, you need to break this up into bits and pieces. And I think it's tough for us as syndicators because we're very deal specific. We're not financial planners. But I think as a sponsor, you need to be talking with guys who are talking to you openly about what your goals are and what fits best for you, right? Because there's a million different ways to skin this cat, and Brett's got, with what he has at the DSTs, I think it's a profoundly great option. But regardless of what you do, you're going to need diversification. You're going to need people that you trust who are going to open up doors for you that don't directly benefit them, right? And I think that's the other key thing to be looking for right now. As the investment world's kind of on shaky ground. Stocks are all-time highs, real estate's an all-time high. We're seeing deals start to come through new at discounts, but there's still going to be some time. The fundamentals are going to erode. As Brett says, when time's your enemy, you can make some bad decisions. And I think, for me, that's just the simplest way that I can put it to people. Is that diversification, working with people you trust, and finding the thing that fits for you and gives you feel comfortable, right?